Okie dokie. We are here. We are set. And we're ready to go. Welcome to the closing beat, everybody. Happy Tuesday. That's on the. That's one of the bingo words. I saw that. I saw the card. Happy day of the week. I like it. We are financial advisors here at Jazz Wealth. Thank you for joining us. We like to talk about the stock market and teach you stuff. We're really focused on being teaching advisors. I just like doing it. So we're going to teach you a few things today. We'll go over some data. There's not a lot to go on here with the stock market, but still some individual things to talk about. I'm going to do that with you. If you like working with advisors that teach, right, and clearly have nothing to sell but themselves, maybe, right? Sell their worth. Hey, check us out, jazzwealth.com. Enough of the marketing. Let's get started here today. Federal Reserve, right? We got the big meeting coming up tomorrow. It's largely expected we're going to do 0.75% rate hike. We all understand that. What we're hoping for is 0.75% here, maybe 0.5% in December, then 1/4 going into next year. That's if we could get any indication of that kind of happening, I think that'd still be strong for the market. Otherwise, remember that the market's already priced in what's about to happen tomorrow. So any outlier events, shocker sort of things, okay, that could change things. But otherwise, it's pretty much expected what we're going to do tomorrow. That'll be in the afternoon. So we will see. If you look at the S&P here today, actually a decent gap up to start the day. And then we faded to a loss, then kind of flat, then slightly down again at the end of the day. Really not much for the market there. Very quiet. And actually, to point it out, can I do this real quick? We go to the 5-minute chart. Your actions in the morning. This is exactly what will happen tomorrow, too. We'll have action, right? This is basically leading up to the first part of the day. And then through the early morning into lunch, nothing. See how it flatlines there? That's very normal on Fed days. And tomorrow will be the same thing, only we'll get action after the Fed, right? So it'll be kind of choppy and stuff, and then we'll get to the Fed announcement and all that stuff, and we'll get all exciting and everything. A couple stocks to point out. You got Meta, a little bit, or actually Meta and Snap, right? The FCC commissioner said that we should ban TikTok, and, well, that's interesting that now we want to do that, but that gave these guys a boost. It was kind of like an early morning, midday kind of a boost there. So, excuse me, you'll catch those in the news because of that. Peloton on Dick's Sporting Goods. I'm not sure. I don't want to take a guess at what Dick's Sporting Goods website is, but Peloton is on their website now, so a little more exposure there. They're happy with that. That stock had about a 6.5% day. That was pretty good for Peloton. Otherwise, a very beaten down stock, right? I'm not trying to sell Peloton here. You got Fox, obviously a good day for them, almost breaking through the downtrend there. So technically it's an interesting one, and fundamentally and news-wise, it's an interesting stock to keep an eye on there. They have a free streaming service that has ads in it. Oh, go figure, right? What Netflix is doing, well, it's showing to really work well for Fox. So people will use a free streaming service and they will enjoy some of the ads. I know, Roku and Hulu and stuff, they have these ads. Even Amazon Prime, you pay for it. They got ads on this thing. But it's showing to help bring up the bottom line there, and that really did help for Fox Core. I believe they wouldn't have maybe had a profit if it wasn't for that. I didn't look too deep into that, but very good for them. Certainly helped their revenues. Now, stock-wise, don't give up on the earnings game here. We got 160 names due to report. Remember, I shared this with you last week. We talked about as of each day of the week here, how many companies in the S&P will be reporting. Well, this was last week here up to the 28th, so obviously that's the busiest week there. Well, now we're in the second busiest week. So basically got 160 names spread out over the rest of the week there, and it is technically the second busiest week. After this, okay, now we start calming down. All these guys over here, this starts getting into retail, some real estate, some utilities, some of the areas that don't have as much impact on the market, but right in there, of course, all of that will have an impact. Now, the Fed meeting, we basically got it, right? 0.75% rate hike tomorrow is pretty much a given. We're looking for the tone, the press conferences there, and interestingly enough, Jerome Powell, the performance of the market wrapped around the announcement of the rate decision and then his conference. It used to be really negative. When he started talking initially and became the Fed president, boy, the markets would do pretty poorly. Now he's doing better besides the last one. He sees a positive average response there, so good for him. He's figuring it out there. Is the Fed going to say we are data-driven? Right? Are they going to say we remain tough, right? We need to get this inflation down like they have been. Or will they hint at a slowing pace? I have a sneaking suspicion it's going to be a mix of all three. I think they'll find a way to make those words clear there. Also, next week we get the midterm elections. Thank goodness. Actually, it hasn't been too bad with the ads and stuff. The postcards in the mail are a little crazy, but midterm elections will be done with, well, hopefully, right? We know who won the midterm elections there. Remember the chart that I shared with you? I will find it here. The the market likes a divided government. You know that now. When the government is divided, the market does a little bit better. Not that it's going to do poorly if it's not. There will be sectors that do poorly if it is a unified democratic government. Healthcare would do poorly, but solar energy would do well. So this is a chart we shared here, just going back through the life of the market, right? The S&P only goes to 1928. With a divided government, we have just a slightly better return. Take out the recessions, it's even a little bit better there. So that's if we don't have a recession. So I won't go over that again, but you know that the market likes more division. I think this midterm is not so simple because let's say if the Republicans end up in control of the House and the Senate, now we're going to start talking government shutdown. You know, that's early next year, but now we're going to start talking that. The Republicans have their stance, and Democrats, you know, that's how it goes. But so they've got their stance, but the Republicans aren't, historically, they are more likely to push for a government shutdown. So could be a little more volatility there if Republicans do take control, but that's still a divided government. Volatility should breed better than average returns there. So we will see. Interestingly, you guys want something to talk about? You want something to chat about here? This will get you. This will get you going. I read an article. I should have saved it. I read an article that said, we really don't want a divided government because it means that stimulus relief checks in the next recession may not happen. And that's a tough one. That's a tough one for an advisor to hear. Like, you counting on a stimulus check from the government? Either way, the point is next week, hopefully by the end of next week, we'll have a whole lot of clarity there. We can put all this behind us and hopefully get back to work because both sides actually have really good ideas and they both agree in terms of adjustments to retirement accounts, extra savings accounts and things. They really have a lot of good stuff that's on the plate and bipartisan. So I'm excited to let them get back to work and come on, let's get with the good stuff here. All right, anyways, going back over here to the charts, the Dow, I got to point this out. We talked about it yesterday, but best October return ever. And I look back, just curious. It was the best October return ever, but was it the best month ever? No, probably not, right? So it actually was the 10th best month ever, if you're curious. Here is the top 10 best performing months for the Dow, and the Dow is an old one now, 100 years with you. 1932, 35.76%. Of course, that was a very volatile year. 31% in April of 1933. You can see all the way down here. 13.96% in October of this year. Puts it in 10th place, but still a very respectable gain there. I thought that'd be fun to share with you guys. Also, I thought I'd point out the Russell. Well, that sucker's showing some strength, right? Not, monster gains, but it's showing some strength there. I don't know exactly what's going on. I started digging into it here. Got a little distracted today with the random goings on, but remember, this is yet another day, right? Pick up on these things. This was yet another day where the Russell was slightly positive, but the rest of the indices, the major ones anyways, they were slightly negative. What's going on there? What supported that there? And it's harder. The Russell's not weighted like the S&P. So there's not 3 stocks that can lift the entire Russell 2000. So it's a little different game going on over there. All right, moving on, Dustin. You're rambling. We got 10-year treasuries. Briefly, 10-year fell back below 4% today, but it didn't last. So that's what we've got there. We've got a small pop in prices, which brings down rates. That's what happened earlier today. And then ultimately it was just chop and stuff. That's going to be the same thing going into tomorrow with the Fed meeting and everything. You got oil up just a little bit here, kind of shaping its higher low coming out of this downtrend. Very difficult to assume that that's a higher low. I'll maintain that comment, but all in all, looking pretty good there. If you don't mind higher gas prices. And then gold. I got to point out gold here real quick. We talked about yesterday, 7 months down, right? Losing for 7 months in a row. It's never happened. That's, you know how they say on TV, like the Dow had its biggest move since whatever year. Okay. Well, I always like to go a step further and go, like I just showed you. What does that mean? Well, gold down 7 months in a row. That's actually never happened. So we got to get creative here. You got to go, okay, how many times has gold lost 2 months in a row? A lot. That's very common. 3 months, 4 months? What do we whittle down the data with? And we said, okay, anything over 5 months. All right, so when gold loses 5 months in a row or more, which is really only 5 and 6 with this 7, but we're going to look forward. When gold loses 5 months in a row straight or 6 months in a row straight, forward performance. Actually, I'm going to just pop over here. Where did I put my thing? Okay, so average 1 month performance, 5.47%, and not one single instance did gold fall. That's a good sign. So when you say, okay, the average return was 5.47%, there had to be some winners, some losers. Nope, 100% winners there, all the way from 1976 to 2018. The worst example was in 1981. It fell 5 months in a row, 29%. The next month it was up 7. So obviously that doesn't erase the 29, but you get what I'm saying there. Looking 3 months ahead, 5.88% there. Now, we got some doozies in there. In 2013, it fell 11%, and then 3 months later, it had fallen another 11%. All in all, there's only 3 times in history that gold was lower 3 months later after being down 5 months in a row. 6 months, 9.94% there, but you got to be a little bit tougher. 70% of the time was it positive. There are 2 times in history where it lost double digits, 11% exactly for each, by the way. And so, bigger return, potential for another double-digit decline there. Where do you stand? Keep in mind, this is 7 months. Each time, by the way, that it fell, 1981, 5 months in a row, lost 29%. 6 months later, it was down 11%. The other time was in 2013, also fell 5 months in a row. The better performance, actually, now that I'm looking at this, the better performance comes when you lose 6 months in a row or more, which is now, right? So very interesting. If you take out if you just look at 6 month losses, actually 100% of the time, it's positive. The average will naturally change, but it's positive. 1 year later, if you take out and only look at times where it was down 6 months or more, 6 months in a row, you actually have 100% positive. You have a 100% positivity rate in every one of these scenarios when it was down 6 months in a row. If you include the 5s in there, then, not so good. Anyways, I just wanted to point that out. I told you I'd share some data here with you today, and man of my word, right? You know what I'm doing. Where was I get off track, man, and just start talking about this stuff. I love it. Let's do some stocks in the news here, and then we'll wrap it up, because careful now. Tomorrow morning, if you're an active trader, you're looking to get in there and mix it up and do all that great day trading or short-term trading. I don't know that tomorrow morning is your best time to do that. You're going to be met with a lot of sleepy markets there. All right, Trex, a good barometer here for the housing market. You know Trex if you've ever driven by a construction site and you've seen the sides of the buildings there. Revenue down 44%. So we look at this and go, ooh, they're slapping this stuff on the side of buildings here. Are they slapping a lot of it on the buildings? No. Revenue down 44%. Now, distributors had cut their inventory. These guys had an inventory issue problem, so they flooded the market with inventory, so part of that's a problem, but still, that doesn't warrant the stock price going higher. Most of their distributors, from what I read there, had way too much inventory, and so they're just kind of cutting orders. They're saying, we're not ordering anymore from you. We got way too much inventory. We've got slowing demand there. These guys have higher costs and everything. Yeah, not a good one for them, as to be expected. Biomed, it's a 50% gain in 1 day. See why I don't like biotech stocks too much? It's great if you're on the right side, but if you were on the wrong side of that, you don't normally walk away from being on the wrong side of a 50% move, especially when it happens in 1 day. So Biomed, if you didn't hear, Johnson & Johnson's buying out they're buying them out. It was $380 a share, I believe. Yes, it was. So that's going to just stick right there till the deal closes, if it does close. If you own Biomed, this is the one that you hold until the deal goes through. You have to believe that the deal is going to go through and there's not going to be any regulatory issues, but we look at this. We have lots of different positions in our accounts, and when a company gets bought out, the stock price always moves, right? And we have to decide, are we going to sell it and take that profit for our clients now? Or are we going to force the closure of the stock, meaning make them come to us and take our shares? Which one ends up with more dollars? It's one of the favorite things I like to do. So as a short lesson today, that's the one that you keep because you're getting $3.80 a share and you get a warrant. Hold on. You get a warrant depending on depending on how you own the shares. You could get a $35 warrant for J&J. So that's the one you say, oh, great, I'm up 50%. Don't sell it. Don't freak out and sell it. You can actually make a few more dollars there. And, every penny counts in this market. So there's your lesson. I often talk about that with clients when we have a stock get bought out because, it could be an extra $100, but all you have to do is sit there and do nothing and you make $100 extra. Yeah, I'll do that. Tesla in the news here as well. Cybertruck. Do you like your Cybertruck? The Cybertruck is coming by the end of 2023. Not my thing. I applaud innovation and unique thinking and everything. It's just not my thing, but looks like we'll be seeing those on the road here soon. Marathon Petroleum, we were just actually talking about this yesterday. It was a great lesson from yesterday, very short, but these guys killed it in terms of earnings there. They're buying back their shares. They are the biggest share repurchaser right now in the S&P. They're killing it there. They beat the street by 10%, meaning they beat Wall Street's best expectations by 10%. So they did even better than what we were all thinking there. I thought it was fun just because it's been coming up in the news here. Marathon Petroleum's margin per barrel. So, there's a lot of political stuff going on right now with the jockeying and stuff for the midterms, but they say, the oil companies are making too much. Well, it's public record. We can now see exactly how much they make and make the decision yourself. They have a margin of $30.21 per barrel. Is that a lot? Apparently, some people think it's a lot, but is it a lot? That's where I'll pose that question there. I mean, are they raking in money hand over fist? Are they bad people? Lastly, we've got Uber. These guys, I usually give them a hard time. But I just don't believe you should be able to be a public company with a consistent losing track record and expect shareholders. That to me, that's a problem, right? You shouldn't be able to do this to shareholders. And they're doing it again. So they brought in $8.3 billion in earnings, not for the year, for the quarter, this last quarter, to earnings. Like they had sales in excess of that, like $27 billion. They got $8.3 billion in earnings, but they lose $1.2 billion. They missed on all the metrics. Look across the board. Trips, rides, users, gross bookings, doesn't matter. They missed on all metrics there. But their revenue, what happened there? Their revenue was better than expected because they're doing all they can do right now to try to turn a profit. And what that means is they just take more from the drivers. So because of them taking more from the drivers, it wasn't as bad as it could have been, but I don't know how long that lasts. Now, Uber also said that we have the upper hand here, because the economy is weakening, therefore more people are coming to want to drive for us, therefore we're going to take a little bit more. I just don't like a whole lot that's going on with all of that. But it's not my opinion. The stock was up on the earnings there because they didn't lose as much as we thought. That's what's celebrated out there. I think that's a different mindset that I'm afraid I don't understand. But I wish them well, and I hope they do turn a profit because that's a lot of money to lose if you can't eventually turn a profit on that thing. So best of luck to you, Uber. I will take your questions now. Comments, complaints, chats, and whatnot. We'll see what we can do, and we'll be ready for the Fed tomorrow. Yeah. I like it. I heard an interesting idea from your father-in-law. Make presidential candidates run with every other party as their vice. Or with other parties, right? Yeah, I watched something one time. Was it Reagan or Kennedy or somewhere in that, Nixon maybe? I don't remember. That said they were going to build their cabinet out of both sides, right? So that it couldn't be one-sided. And I think ultimately they said they did regret that. But I don't know. It was a nice gesture. I can't remember who it was, what side they were on or anything. I remember watching that going, worth a shot, right? Yeah. Not sure you understand why to hold the buyout if it jumps near the deal price, because you're going to get more than the deal price. So it will hover right there. It won't like trade much more than that. Now, again, your belief is that the deal will go through. Remember Twitter? Ah, all right. Oh my God, why would I sell it? It's going to go up to here, and then the deal wasn't going to go through, and woo, So that happens, and there could be regulatory pressures here that say no, that deal's not going to go through. So you have to, number one, believe that this deal will go through at that price and that deal, the timing and everything. That's why I don't like biotech stocks, because I don't understand enough to say that I get what the company does, I get all that, but I don't understand enough to say that the government won't get their hand in the way. Maybe they do, maybe they don't. Hopefully they don't. Tesla's auto taxi will wipe out Uber in the future. Yeah, if anybody could do it, they can. I was actually reading a study, a research study that Goldman Sachs put out about the lines of code that it actually takes for, like, this was crazy stuff, man. The lines of code that it takes to have a normal car, which they call level 0, level 1, which is some driver assist, but ultimately you're in control of the car. It just tells you if you're swerving a little bit. The lines of code it takes for level 2, which is some level of automation, and level 3, which was, getting to the just press a button and drive, and you're essentially hanging out. The lines of code. So what they did is they said, how many lines of code is that going to take? How many lines of code can the average developer put together? Okay, well then how many developers would you need? How much money is that going to take? Well, you're talking money that I hope somebody ran those numbers with, even if they're half right. You're dwarfing, like for Ford to do that, you're dwarfing the amount that they spend on anything, right? Everything. So there was the argument of some consolidation and maybe some partnerships and collaboration there, which seems like it's going to have to happen. It's just a fascinating article. They do weird stuff like that. They did one on the Oculus, and the medical science behind it. It's very cool. Anyways, rambled there. SoFi, yeah, they were out today. Let me see. So SoFi, looked at it this morning. It did fade, kind of like everything else. Remember, this is I don't know, you can't pick this as a bottom. I certainly wouldn't. But this is the company that they're going to get there. They've taken the Amazon approach. They're going to spend a lot of money right now. Margins can be smaller. They're happy with that until they grab every single wallet they can. So you're holding on for dear life until that, until that comes to fruition. Chris has got a biotech strategy for me. No, thanks. No. There's the word right there. You'll win 9 out of 10 times, but you'll get clobbered the other one time. Somehow I will make it 5 times. I will get clobbered 5 times and 9 times. I don't pretend to know everything, and I'll admit I will lose on biotech stocks. I'll lose on Forex. Notice how we never talk about that? I'm just not good at it. I don't see it the way I see other things, and that's okay. Thoughts on oil companies' performance? Looking forward 6 months, 12 months, any other industry you think may outperform? I find it hard to suggest that those oil companies will outperform they have already outperformed. So you're asking for somebody that's up 70%, or even now with what we saw today, 80%. You're saying 6 months from now, they're going to keep that pace? That will be something that's only really happened twice in ever, right? So I wouldn't say energy outperforms going forward if you're talking about raw fossil fuel energy, the big 5. Yep. I like it. Is correct. Yep. I've been there, lived it. Okay, I'm going to go live the rest of my day here, get back to work there. You guys enjoy the rest of your day, because tomorrow we'll be talking to Fed. We'll talk about everything that's happening there. There will naturally be some stock market movement, and we'll be here to cover it along with everything else. Appreciate you hanging out with us and watching, commenting, and doing all that good stuff. We'll try it again tomorrow.